Most people think financial success starts with a bank account, a high-paying job, or the right investments. But let me tell you something. Wealth doesn't start in your wallet, it starts in your mind. The truth is, your beliefs about money shape your entire financial reality. Your thoughts, your habits, and your actions are all dictated by the way you see money. If you believe money is scarce, hard to earn, and even harder to keep, guess what? That's exactly what your life will reflect. But if you believe that money is abundant, that opportunities are everywhere, and that you have the power to attract and grow wealth, your financial reality will completely transform. Think about it. Why do two people, given the same opportunities, same resources, and same circumstances, often end up with completely different financial results? One thrives while the other struggles. Is it luck? No, it's because of their money mindset. The person who thrives operates with an abundance mentality, while the person who struggles is trapped in scarcity thinking. And here's the kicker. Most of your beliefs about money, you didn't even choose them. They were programmed into you from childhood. You absorbed them from your parents, your teachers, your environment, and the media. If you grew up hearing phrases like, money doesn't grow on trees, rich people are greedy, you have to work hard just to get by, there's never enough money, then guess what? Those beliefs are running your life right now, whether you realize it or not. And here's the dangerous part. Your brain will always look for proof to confirm what you already believe. If you believe making money is hard, your mind will focus on struggles, setbacks, and obstacles. If you believe you're not good with money, you'll subconsciously sabotage your finances, overspend, or avoid learning how to invest. If you think rich people are bad, your subconscious will push wealth away because deep down you don't want to be seen as one of them. But let me tell you the truth. Wealth is not evil. Money is not the enemy. Money is simply a tool, an amplifier. If you're a kind and generous person, more money allows you to give and contribute at an even greater level. If you're creative and ambitious, money allows you to bring your ideas to life. If you care about your family, money gives you the freedom to provide for them, to create security, and to build a legacy that lasts. So the first step to mastering money is rewiring your mindset. You must become aware of the limiting beliefs that are holding you back and replace them with empowering beliefs that will drive you forward. Let's do an exercise right now. Think about your biggest belief about money, the one that feels the most true to you. Maybe it's, I have to work hard to make money, or I'll never be rich, or I'm just not good with finances. Write it down. Now ask yourself, where did this belief come from? Was it something you heard growing up? Did you see someone struggle financially and that experience shaped your thinking? Did a past failure make you doubt your ability to handle money? Next, challenge it. Is this belief absolutely true? Have there been people who became wealthy without working themselves into exhaustion? Have people who once struggled with money turned things around? The answer is yes. There is proof everywhere that your limiting belief is just that, a belief, not a fact. Now replace it. Choose a new, empowering belief that serves you. Instead of making money is hard, say, making money is about strategy, value, and leverage. Instead of I'm bad with money, say, I am learning and improving my financial intelligence every day. Instead of I'll never be rich, say, wealth is available to me and I am taking the right steps to create it. You have to rewire your mind for abundance. You have to see money as something that flows, not something that is scarce. When you start thinking like a wealthy person, when you start acting like someone who attracts and manages money well, your external reality will follow. Here's another truth. The wealthiest people don't think about money the way most people do. They don't see it as something to chase. They see it as something to attract. They don't say, I can't afford it. Instead, they ask, how can I afford it? They focus on solutions, not limitations. This is why personal development is just as important as financial education. Because if you don't grow as a person, even if you make a lot of money, you won't keep it. Think about lottery winners. Over 70% of them go broke within a few years. Why? Because they never developed the mindset or skills to handle wealth. They got the money, but they didn't become wealthy. True wealth is an identity. It's a way of thinking, a way of operating, a way of seeing opportunities where others see obstacles. It's the belief that no matter what happens, whether the market crashes, whether the economy shifts, whether you face setbacks, you will always find a way to create, grow, and protect your wealth. Now let's talk about action, because belief alone won't change your life. You need to back it up with action. Starting today, I want you to take 3 steps. Audit your money beliefs. Spend 10 minutes writing down the thoughts you have about money. Be brutally honest. Then, for every limiting belief you write down, replace it with a new empowering one. Surround yourself with abundance. Who you listen to shapes your financial reality. If you're always around people who complain about money, who see the world as full of lack and limitation, guess what? You're going to absorb that energy. Start reading books, listening to podcasts, and following mentors who think big, who think in terms of opportunity, growth, and financial freedom. Take a wealth-building action today. It doesn't matter how small. Open an investment account, save an extra $10, learn one financial principle, take one step in the direction of wealth, because momentum is everything. If you do this, if you change the way you think, if you shift from scarcity to abundance, if you start acting like someone who is financially empowered, you will begin to see changes. Doors will open. Opportunities will appear. You will attract the right people, the right ideas, and the right circumstances, because money is a game. And the first rule of the game: believe you can win. Money isn't just about how much you earn. It's about how much you keep and how much that money grows over time. And one of the most powerful forces in wealth building is something most people completely overlook: compounding. This is the secret that turns small, consistent actions into massive financial success. It's the principle that has built empires, created billionaires, and given financial freedom to those who understand and apply it. Yet most people never take full advantage of it because they're too focused on quick wins, instant gratification, and short-term thinking. Compounding is simple in concept, but life-changing in execution. Imagine you have a single dollar. You invest it. And over time, that dollar earns more money. Now you don't just have your original dollar, you have the earnings from it too. And here's where the magic happens. If you keep reinvesting those earnings instead of spending them, your money doesn't just grow, it multiplies exponentially. Over time, it snowballs into something far greater than what you started with. This is why Albert Einstein supposedly called compounding the 8th wonder of the world, because it has the power to turn almost nothing into incredible wealth. Let's break it down with a real example. Suppose you start with $1,000. and invest it in something that gives you an average annual return of 10%, like the stock market historically has over the long run. In the first year, you earn $100, so now you have $1,100. If you just left that money alone, it would keep earning 10% every year. But here's where most people go wrong. They take the earnings and spend them. Instead, if you reinvest the earnings, your money begins to work for you. In year 2, you don't just earn 10% on your initial $1,000. You earn 10% on the new total of $1,100. That means your earnings this time are $110 instead of just $100. And this cycle keeps repeating itself, with each year's gains building on top of the previous ones. Fast forward 40 years, and that $1,000, without you adding a single extra penny, grows to over $45,000. And if you'd started with $10,000, that becomes nearly $500,000. But here's the real kicker. The biggest gains come later in the process. In the first few years, compounding doesn't seem like a big deal. The growth is small, almost unnoticeable. But after a few decades, the numbers explode. This is why time is the most valuable asset in the compounding equation. The earlier you start, the bigger the payoff. Let's take two people, Sarah and John. Sarah starts investing $200 a month at age 20 and does this for 20 years, then stops. John waits until he's 40 to start and invests the same $200 a month until he's 65. Who has more money at retirement? Most people assume it's John, because he contributed for 25 years while Sarah only contributed for 20. But the truth is shocking. Sarah ends up with far more wealth. Why? Because she gave her money more time to compound. She got the biggest advantage in the game, starting early. But here's the part that most people miss. It's not just about starting early, it's about staying in the game. The biggest mistake people make with compounding is pulling their money out too soon. They panic when the market drops, they cash out when they see a small gain, or they stop investing when times get tough. But the people who win the game of compounding are the ones who stay invested for the long haul. Markets go up and down, but over decades they always trend upward. The people who ride out the storms, who don't touch their investments, who keep contributing even in downturns, those are the ones who see exponential growth. Compounding isn't just about money, it's about habits. The same principle applies to skills, knowledge, relationships, and health. The small actions you take every day, when consistently applied over time, lead to extraordinary results. Read 10 pages of a book daily, and in a year you'll have read 12 books. Exercise for 30 minutes a day, and in a year you'll have worked out over 180 hours. Small actions may seem insignificant in the moment, but over time, they lead to massive transformation. So if compounding is so powerful, why doesn't everyone take advantage of it? The answer is simple: impatience. People want results now. They don't want to wait 10, 20, or 30 years for wealth to build. They want instant success, fast money, quick wins. That's why so many people chase risky investments, fall for get-rich-quick schemes, or spend their money instead of letting it grow. But the reality is, the most powerful financial strategy isn't exciting. It's consistent, patient, and disciplined. The people who embrace this mindset are the ones who build true, lasting wealth. Think about how this applies to your own life. Are you investing consistently, even in small amounts? Are you letting your money compound instead of cashing out early? Are you thinking long-term, or are you constantly looking for shortcuts? If you want financial freedom, if you want to master the game of money, you need to commit to the long-term process. The good news? It's never too late to start. If you didn't invest when you were 20, that's okay. Start now. If you haven't been consistent in the past, start today. The key is to begin and to keep going. The sooner you start, the more time your money has to work for you, and the bigger your future wealth will be. So here's the challenge. Make a commitment right now to take action. If you don't have an investment account, open one. If you aren't investing consistently, set up automatic contributions, even if it's just $10 a week. If you've been impatient, shift your mindset to long-term wealth building. The power of compounding is real, but it only works for those who stay in the game. This is how true financial freedom is built, not through luck, not through shortcuts, but through the unstoppable force of time and consistency. Make the decision today to let compounding work for you. And years from now, you'll look back and realize that this was the moment everything changed. Financial independence isn't just about making money, it's about creating a life where money works for you instead of you working for money. Most people spend their entire lives trapped in a cycle of earning, spending, and struggling to keep up. They wake up every morning, go to work, get their paycheck, pay their bills, and then do it all over again. But what if there was a different way? What if you could break free from this cycle and reach a point where your money takes care of your needs, your lifestyle, and your future without you having to trade your time for it? That's the real goal. Financial independence means that your investments, assets, and passive income generate enough money to cover your expenses indefinitely. It's the moment when you no longer need to work for money because your money is working for you. It doesn't necessarily mean being a millionaire or never working again. It means you have the freedom to choose what you do with your time because your financial needs are already met. That's real power. That's real security. And the best part? Anyone can achieve it with the right strategy and discipline. Most people think financial independence is only for the rich or for those who inherit wealth, but that's simply not true. The reality is that financial independence is a formula, and anyone who follows it consistently will get results. It's about knowing your financial freedom number, the amount of money you need to cover your expenses without working, and then creating a plan to reach that number. The first step is understanding that financial independence isn't about how much you earn. It's about how much you keep and grow. Too many people believe that if they just made more money, they would be financially free. But that's a trap. Think about it. How many people do you know who make 6 or 7 figures yet still live paycheck to paycheck? How many celebrities, athletes, and lottery winners have made millions only to end up broke a few years later? The truth is, it's not about how much you make. It's about how you manage, invest, and multiply what you have. There are 3 fundamental pillars of financial independence: income, expenses, and assets. If you master these 3, you will never have to worry about money again. The first pillar is income. This is what most people focus on: their paycheck, their salary, or their business revenue. But here's the secret: relying solely on active income that requires your time and effort, is the biggest financial risk you can take. Why? Because if something happens to your ability to work, your income disappears. This is why wealthy people don't just focus on earning more. They focus on creating streams of passive income. Passive income comes from assets. Investments that generate money whether you work or not. Stocks, bonds, real estate, businesses, royalties, dividends. These are all ways to make money without trading time for it. The key is to take a portion of your active income and convert it into passive income. The goal is to build multiple income streams so that one day you no longer need a paycheck to survive. The second pillar is expenses. If you don't control your expenses, you will never be financially independent no matter how much you earn. It's not about being cheap or depriving yourself. It's about spending intentionally and making sure your money is going toward things that truly matter. Too many people fall into the trap of lifestyle inflation. Every time they make more money, they increase their spending. A raise at work leads to a bigger house, a fancier car, or more luxury vacations. But if your expenses grow as fast as your income, you're never actually building wealth. You're just staying on the same treadmill at a higher speed. The wealthiest people in the world don't just focus on how much they make, they focus on how much they keep. Warren Buffett, one of the richest men on the planet, still lives in the same modest house he bought decades ago. Why? Because he understands that wealth isn't about flashy spending. It's about freedom, security, and options. The third pillar is assets. This is where true financial independence is built. Your wealth isn't measured by your income. It's measured by your assets. Assets are things that put money in your pocket even when you're not working. A well-diversified investment portfolio, rental properties, businesses that run without you. These are all wealth-building assets. The more assets you own, the closer you are to financial independence. One of the most powerful ways to measure your progress toward financial independence is something called the financial freedom formula. Total passive income greater than equals total expenses when the income from your assets covers all of your living expenses. You've achieved financial independence. At that point, you no longer need to work to survive. You work because you choose to. Imagine waking up in the morning and knowing that your investments, properties, or businesses are covering all your bills. How would that change your life? How would that change your decisions? That's the goal, and it's achievable if you start making the right moves today. The biggest obstacle to financial independence isn't a lack of opportunity. It's a lack of action. Too many people believe that they'll start investing when they have more money, but that's a lie. The key to building wealth isn't about having a lot of money to start. It's about getting started with what you have and being consistent over time. Think about this. If you invest just $500 a month into a well-diversified portfolio with an average return of 10%, in 30 years, you'll have over $1 million. But if you wait 10 years to start, you'll end up with less than half that amount. The difference, time. The sooner you start, the faster you reach financial independence. Here's the challenge. Decide right now that you will no longer trade time for money for the rest of your life. Decide that you will build income streams that pay you even when you sleep. Start small if you have to, but start. Invest in assets, reduce unnecessary expenses, reinvest your returns, keep growing. Financial independence isn't a dream, it's a choice. And the people who make that choice, who commit to the process and who take action consistently are the ones who break free from the financial trap and create a life of true freedom. Because at the end of the day, money's just a tool. The goal isn't to be rich, it's to be free. The single most important factor that determines your financial success isn't the market, the economy, or even your income. It's your mindset about money. The way you think about wealth, risk, and opportunity shapes every financial decision you make. Whether you realize it or not, the wealthy don't just have more money, they have a different psychology about money. They see opportunities where others see obstacles. They focus on growth where others focus on limitations. They take control of their financial future while others leave it to chance. If you want to build real, lasting wealth, you must first master your financial psychology. Most people don't realize it, but their money beliefs were shaped long before they ever earned their first paycheck. From childhood, we absorb financial lessons, sometimes unconsciously, from parents, teachers, and society. If you grew up in a household where money was always tight, where people said things like money doesn't grow on trees or rich people are greedy, those beliefs may still be influencing you today. If you were raised to believe that financial security is only for the lucky or the privileged, you might unconsciously hold yourself back from opportunities that could change your financial future. The truth is, money is neutral. It's not good or bad. It's simply a tool. It amplifies who you already are. If you are generous, having more money allows you to give more. If you are responsible, money allows you to create a better future for yourself and your family. But if you have a negative or fearful mindset about money, no amount of income or wealth will ever make you feel secure. This is why some people who win the lottery or make millions end up broke within a few years. Their mindset never changed, so they made the same financial mistakes over and over again. One of the biggest psychological barriers to wealth is fear. Fear of failure, fear of losing money, fear of taking risks. This fear keeps people stuck in the same financial patterns year after year. They avoid investing because they're afraid of losing money, so they miss out on the power of compounding. They avoid taking career or business opportunities because they're afraid of rejection or uncertainty. But what they don't realize is that not taking action is the biggest risk of all. Inflation is eating away at their savings. The cost of living is rising. By playing it safe, they are actually falling behind. The wealthy think differently. They don't avoid risk, they manage it. They understand that every investment, every opportunity comes with some level of uncertainty, but instead of letting that stop them, they educate themselves, they prepare, and they take calculated risks. They know that no one becomes financially free by sitting on the sidelines, waiting for the perfect opportunity. They take action. Another major mindset shift is moving from scarcity thinking to abundance thinking. Most people operate from a scarcity mindset. They believe there's only so much wealth to go around, and if someone else has more, it means less for them. This leads to jealousy, fear, and hesitation. They believe opportunities are limited, so they hoard money instead of putting it to work. They focus on what they can't do instead of what they can do. But the wealthy operate from an abundance mindset. They know that wealth isn't a limited pie. There's always more being created. They look for ways to add value, knowing that money flows to those who solve problems and create solutions. Instead of saying, I can't afford this, they ask, how can I afford this? Instead of saying it's too risky, they say, how can I make this work? This shift in thinking changes everything. Because when you believe opportunities are endless, you start to see them everywhere. You start to take action instead of making excuses. You stop blaming the economy, the government, or bad luck, and you take full responsibility for your financial future. That's the mindset that builds true wealth. Another key psychological factor is the ability to delay gratification. Most people prioritize short-term pleasure over long-term success. They spend money on things that bring them temporary happiness, fancy cars, expensive vacations, latest gadgets, without thinking about the long-term impact. But the wealthy understand that wealth is built over time, not overnight. They are willing to sacrifice temporary comforts for long-term financial freedom. They don't just think about today. They think 10, 20, 30 years ahead. They ask, will this decision bring me closer to financial independence or further away? Every time you spend money, you are making a choice to build your future wealth or to trade it for something temporary. Think about this. If you invested $5 a day instead of spending it on coffee or fast food, in 30 years, you could have over $300,000. The small, everyday decisions add up. Wealth isn't built in big, dramatic moments. It's built in the daily choices that most people overlook. Another critical mindset shift is understanding that money is a tool, not a goal. Too many people chase money for the sake of having more, thinking that once they reach a certain number, they'll finally feel successful. But money alone won't make you happy. True financial success isn't just about accumulating wealth. It's about what that wealth allows you to do. It's about having the freedom to spend time with your family, to travel, to support causes you care about, to live life on your terms. If money becomes your only focus, you risk falling into the trap of never feeling like you have enough. No matter how much you make, it won't satisfy you because there will always be someone with more. But if you see money as a tool, a way to create freedom, impact, and security, you'll be far more fulfilled. One of the biggest psychological secrets of the wealthy is that they give back. It may seem counterintuitive, but generosity is a wealth-building strategy. When you give, you reinforce the belief that there is more than enough. You stop operating from fear and start operating from abundance. And the more you give, the more you attract. Money flows to those who manage it wisely and use it to make a positive impact. So how do you shift your financial psychology? It starts with awareness. Pay attention to your money beliefs. Challenge them. Ask yourself, are these beliefs helping me or holding me back? Start surrounding yourself with people who have a wealth mindset. Read books, listen to financial experts, learn from those who have achieved what you want. The more you expose yourself to new ideas, the more your thinking will change. The truth is, financial success is 80% psychology and only 20% strategy. You can have the best investment plan, the best opportunities, and the best knowledge. But if your mindset is filled with fear, doubt, and scarcity, you'll sabotage yourself. But when you develop a strong financial mindset, one built on confidence, abundance, and action, you become unstoppable. The choice is yours. You can keep thinking like everyone else, staying stuck in the same financial struggles, or you can shift your mindset and start seeing money as a tool for freedom and opportunity. The moment you change your beliefs, you change your financial future. It all starts in your mind. The world of investing can seem complex, overwhelming, and even risky for those who haven't taken the time to understand it. But the reality is, if you want to achieve financial freedom, you must become an investor. There is no other way. Saving alone will never make you wealthy because money sitting in a bank account is constantly losing value due to inflation. The key to real financial growth is making your money work for you by putting it into the right vehicles, ones that generate passive income, compound over time, and increase in value. The first thing to understand about investing is that it is not gambling. Too many people think that the stock market is just a giant casino, and that mindset keeps them from ever taking the first step. Yes, there is risk involved, but investing is not about luck. It's about strategy, education, and discipline. The world's most successful investors don't gamble with their money. They follow proven principles that build wealth over time. The difference between those who succeed and those who fail in investing is simple. The successful ones stick to a strategy and don't let emotions drive their decisions. One of the most powerful concepts in investing is compounding. Albert Einstein called it the eighth wonder of the world for a reason. Compounding means your money is not just growing. Imagine this. If you invest $1,000 and earn 10% in a year, you now have $1,100. The next year, that 10% is earned on $1,100 instead of just the original $1,000. Over time, this snowball effect turns small amounts into massive wealth. If you invest consistently and reinvest your returns, you can build a fortune without ever having to work harder. That's how ordinary people become financially independent. The biggest mistake people make is waiting too long to start. They think they'll invest when they make more money or when the timing is right, but the truth is, the best time to start was yesterday. The second best time is today. The longer you wait, the more you miss out on the power of compounding. Investing isn't about making a quick buck, it's about playing the long game. Many people get caught up in trying to time the market, jumping in and out based on short-term fluctuations, but study after study shows that time in the market beats timing the market. The most successful investors aren't trying to predict the future. They invest consistently, stay patient, and let the market work in their favor over time. One of the smartest ways to invest is through diversification. This means spreading your money across different types of investments instead of putting everything in one place. It's like building a strong financial foundation. If one area struggles, the others keep you stable. The wealthiest people in the world don't rely on just one investment. They own stocks, bonds, real estate, businesses, and other income-producing assets. If you're just starting out, one of the best ways to invest is through index funds. These funds track the overall stock market and have historically outperformed most individual investors over time. Instead of trying to pick individual stocks, which is risky and time-consuming, index funds allow you to own a small piece of hundreds or even thousands of companies. The legendary investor Warren Buffett has said that if most people simply put their money in low-cost index funds and left it alone for decades, they would end up far wealthier than those who constantly try to beat the market. Another powerful investment strategy is real estate. Owning property has created more millionaires than almost any other asset class. When you buy real estate, you're not just buying a place to live, you're buying an asset that can generate rental income, appreciate in value, and provide tax advantages. The key to successful real estate investing is buying in areas with strong demand, managing properties well, and using leverage wisely. Beyond stocks and real estate, other investment options include bonds, businesses, commodities, and alternative assets like cryptocurrency. Each investment type has its own risks and rewards, which is why it's important to educate yourself and create a portfolio that matches your financial goals and risk tolerance. Many people avoid investing because they're afraid of losing money, but here's the truth. There is no such thing as a risk-free life. Keeping your money in a savings account isn't safe. It's actually losing value every day due to inflation. Not investing at all is a guaranteed way to fall behind. The key is learning to manage risk, not avoid it. One of the best ways to manage risk is to follow the rule of asset allocation. This means dividing your investments based on your financial goals, your age, and your risk tolerance. For example, younger investors can afford to take more risk because they have more time to recover from market downturns. As you get older and closer to retirement, it makes sense to shift more of your investments into stable assets like bonds or income-generating properties. Another major factor in investing success is avoiding emotional decisions. The biggest mistakes investors make happen when they let fear or greed control their choices. When the market crashes, most people panic and sell at a loss. When the market is booming, they rush in and buy at the top. Successful investors do the opposite. They stay calm, buy when others are fearful, and hold on for the long term. The reality is, investing isn't just for the wealthy, it's how people become wealthy. You don't need to start with a fortune. You just need to start. Even small amounts, invested consistently, can turn into massive wealth over time. If you invest $500 a month into a well-diversified portfolio with a historical return of 10%, you could end up with over $1 million in 30 years. To build wealth through investing, you need a system. Set it and forget it. Automate your investments, contribute consistently, and resist the urge to react to every market fluctuation. The market will go up and down, but over time, it has always gone up. The key is discipline and consistency. Another essential principle is knowing when to exit an investment. Many people get emotionally attached to their investments, whether it's a stock, a property, or a business. But the best investors know when to cut losses and move on. If an investment isn't performing, don't hold on to it out of stubbornness. Redirect your money into something that works. Finally, education is your greatest investment. The more you learn about investing, the more confident and successful you'll be. Read books, take courses, follow successful investors, and stay informed. Financial freedom isn't about luck. It's about knowledge, action, and persistence. The road to financial freedom is paved with smart investing. If you're not investing, you're leaving your financial future to chance. The people who take control of their investments today are the ones who will live life on their own terms tomorrow. It doesn't matter where you start. What matters is that you start. Your future self will thank you. Financial freedom is not just about making money. It's about protecting and sustaining it for the long run. Many people focus entirely on growing their wealth, but fail to put systems in place to protect what they've built. The truth is, making money is just one part of the equation. Keeping it and ensuring it lasts through generations requires a different level of discipline, strategy, and foresight. If you don't have the right structures in place, a single bad decision, an unexpected crisis, or poor money management can wipe out everything you've worked so hard for. One of the most critical elements of protecting wealth is understanding taxation and using it to your advantage. Most people give away a huge portion of their income and investments simply because they don't know how to legally minimize their tax burden. The wealthy don't just make money, they understand the tax code and use strategies to keep more of what they earn. They take advantage of tax-efficient investment accounts, deductions, and credits. They structure their businesses in a way that allows them to reduce their taxable income. They understand that taxes are one of the biggest expenses in life, so they make sure they don't overpay. One of the simplest ways to protect your wealth from excessive taxation is by investing in tax-advantaged accounts. In the U.S., this includes accounts like 401ks, IRAs, Roth IRAs, and HSAs, all of which offer tax benefits that can significantly increase your long-term wealth. These types of accounts allow your money to grow tax-free or tax-deferred, meaning you keep more of your returns instead of giving them away to the government. If you're a business owner, setting up retirement plans like a SEP IRA or a solo 401k can help you shelter even more of your income from taxes while building your wealth for the future. Beyond tax efficiency, another critical factor in wealth protection is diversification. Many people make the mistake of putting all their money in one place, whether it's a single stock, a business, or even just a savings account. But no single investment is completely safe. Markets fluctuate, businesses fail, and economic downturns happen. The key to long-term financial security is spreading risk across multiple asset classes so that if one area takes a hit, the others can keep you stable. The wealthiest people in the world understand this principle deeply. They don't rely on just one stream of income. They build multiple sources of income that protect them from financial downturns. This includes stocks, bonds, real estate, businesses, intellectual property, and other passive income generating assets. When you have multiple income streams, you're not dependent on any one source to maintain your lifestyle. Even if one area suffers, the others can keep you afloat. Another often overlooked aspect of protecting wealth is having the right insurance. Many people see insurance as an unnecessary expense, but in reality, it's a crucial tool for ensuring that an unexpected event doesn't destroy their financial stability. Life insurance, disability insurance, and umbrella liability insurance can protect you and your family from unforeseen disasters. If you run a business, having the right coverage, such as key person insurance or business liability insurance, can prevent a single crisis from wiping out everything you've built. Estate planning is another essential step in securing wealth, yet most people put it off until it's too late. If you don't have a plan in place, the government will decide what happens to your assets when you're gone. Without a proper estate plan, your wealth could be heavily taxed, mismanaged, or even lost in legal disputes. The wealthy use trusts, wills, and legal structures to ensure their wealth is passed down efficiently and in alignment with their values. By working with estate planning experts, you can create a strategy that protects your family's financial future and keeps your hard-earned money out of unnecessary legal battles. One of the most powerful ways to ensure your wealth lasts for generations is teaching financial literacy to your family. Too many people build incredible wealth only for it to be lost within a generation because their children or heirs were never taught how to manage it properly. There's a reason why many wealthy families establish family offices or conduct financial education for their heirs. If you don't equip your loved ones with the knowledge and mindset to sustain wealth, all the money in the world won't help them. The best way to create generational wealth isn't just to leave behind money, it's to leave behind financial wisdom, principles, and systems that can sustain prosperity over the long term. Another major threat to financial security is emotional decision-making. Many people build wealth only to lose it because they make impulsive, fear-driven choices. Whether it's panicking during a market downturn and selling investments at a loss, overspending in times of financial success, or falling for get-rich-quick schemes, emotions can be one of the biggest wealth destroyers. The most successful investors and entrepreneurs develop a mindset of rational decision-making and patience. They don't react to short-term market fluctuations. They stick to their strategy. They don't let fear dictate their financial choices. They rely on data, education, and long-term thinking. One of the biggest mistakes people make when they start earning more money is lifestyle inflation. This is when your expenses rise as your income increases. Many people fall into the trap of upgrading their homes, cars, vacations, and spending habits the moment they start making more. The problem? If you constantly increase your spending to match your income, you'll never truly build lasting wealth. The wealthiest people understand the power of living below their means and using excess income to build assets, not liabilities. The secret to long-term financial success isn't just making money, it's keeping and multiplying it through smart financial habits. Wealthy people don't just earn, they allocate their income in a way that maximizes growth and security. They prioritize investments over luxuries, financial education over temporary pleasure, and long-term wealth over short-term gratification. Another key principle in securing financial freedom is giving back. It may seem counterintuitive, but the wealthiest and most financially secure people in the world are often generous givers. Why? Because giving reinforces the mindset of abundance. When you give, you affirm that there's more than enough wealth to go around. You shift your focus from scarcity to opportunity. Plus, strategic philanthropy can have tax benefits, strengthen your legacy, and create meaningful impact. Whether it's supporting causes you care about, setting up charitable foundations, or mentoring others in financial literacy, giving back can be one of the most fulfilling ways to sustain and protect wealth. Finally, financial security isn't just about money. It's about freedom and peace of mind. The ultimate goal of wealth isn't just to have more, but to create a life where you don't have to constantly worry about money. It's about having the freedom to make choices based on passion and purpose, not just necessity. It's about knowing that your financial future is secure, that your family is protected, and that your wealth will continue to grow for generations to come. True financial success isn't about chasing money. It's about mastering it, protecting it, and ensuring it serves you, not the other way around. Those who win the game of wealth don't just play offense, they play defense. They don't just focus on making money, they focus on keeping it, growing it, and securing it for the long haul. When you adopt this mindset and put the right systems in place, financial security isn't just possible, it's inevitable. Financial freedom isn't just a dream, it's a decision, a strategy, and a commitment to mastering the game of money. It's not reserved for the lucky or the privileged. It's available to anyone willing to learn, take action, and stay disciplined. The truth is, wealth is not built overnight, nor is it achieved by chance. It's the result of consistent, smart decisions, long-term thinking, and a willingness to take control of your financial future. We've covered the core principles of financial mastery, understanding the rules of the game, knowing where you are and where you're going, saving and investing wisely, using leverage and compounding to your advantage, and most importantly, protecting your wealth for the long haul. These are not just theories. They are the exact principles that the world's most successful investors, entrepreneurs, and financial leaders have used to build lasting generational wealth. The biggest difference between those who struggle financially and those who achieve financial freedom isn't how much money they start with. It's how they think and act. Wealthy people don't rely on luck or wishful thinking. They take intentional, calculated steps to make their money work for them. They educate themselves, invest consistently, manage risk, and build systems that allow them to grow and protect their wealth over time. The real question is, will you take action? Because knowledge alone won't change your life. Action will. You don't need to have it all figured out today, but you do need to start. Whether it's setting up your first investment, automating your savings, diversifying your income, or creating a financial plan, the key is to take that first step and keep moving forward. Imagine a future where money is no longer a source of stress, but a tool that gives you freedom, choices, and opportunities. Imagine waking up every day knowing that your finances are working for you, that your investments are growing, and that your future is secure. That future is not just possible, it's inevitable if you commit to mastering the game. So don't just sit on this knowledge. Apply it, live it, own it. The path to financial freedom is waiting for you. All you have to do is take the first step. Decide today that you will no longer be a player in the money game. You will be the master of it.